Cryptocurrency, Bitcoin, IRA, penny stocks, the list goes on. If you've been wondering how to dive into investing, then pay close attention as our next guest helps make sense of your dollars. We are joined by Equitas Capital and Advisors President Derek L. Fossier to tell us how to DIY your portfolio. Thank you so much for joining us this morning.
Thanks for having me. Happy to be here.
Okay, so you've got a little bit of extra money, or you're trying to save that extra money to put away. Where do you go first as far as investments go?
Well, I think if you've got some money to invest, you're already ahead of the path. The most important thing is to just get started. Time in the market is your biggest factor. So if you're more on the conservative side, if you need this money in the next year or two, you're trying to buy a car, do a down payment on our house, you want to be more conservative, look at bonds. For example, we're rolling treasuries at Equitas right now for our clients at 5.2%. It's not a bad place to go. That yield is higher than it's been in decades. Let's say you don't need the money for a few years, 5 or longer. You can afford to take a little bit of risk. That's when you want to start looking at equities. If you're saving for retirement and you're younger, you have 30 plus years, an old rule of thumb that's coming back into fashion now is you can invest your age in bonds. So if you're 25, let's say you have 25% of your portfolio in bonds. And what this does is it automatically makes your portfolio more conservative as you get closer to your retirement age, closer to needing the money, so that you have less risk that it's not going to be there when you need it.
Okay, so whatever your age is, that percentage of your portfolio, general rule of thumb would be put that in bonds so you have some more secure money, less likely to lose big as a bigger gamble or bigger investment.
Right. When you're going to need the money, you want it to be there. So as you get closer to needing it, you want to be more conservative. I mentioned bonds and equities. There's a third category called alternatives. This is where some of the cryptocurrency that you mentioned earlier lies, private investment, and some niche strategies. Equitas has won awards in this area, but you want to make sure as an investor you have a lot of experience and skill before going there.
Yeah, absolutely. So if somebody is still listening to this and maybe a little overwhelmed, they can obviously seek a professional. But if they're trying to do it themselves, because the reality is that does save some money if you don't have to pay the fees. You said first just get started.
Right.
Say you're started and now you're looking at, you want to try, maybe you've heard this Bitcoin, penny stocks. Is that a lot more risky?
It's extremely risky. We would really recommend talking to a financial professional before you make any decisions, especially if you want to get what we call sophisticated in the crypto universe. It's one of the most risky areas that you can go in.
So what if you want to be a little riskier, you want to diversify, you hear that word all the time thrown around. What if you want to diversify your portfolio, but you don't really know much else besides stocks and bonds? What can you do to diversify your portfolio?
We follow multiple different asset classes, and as you mentioned, diversification is another great free lunch in the investment world. As one category goes down, another category might be going up, and this is a great time to rebalance your portfolio back to targets. You've got your large cap US stocks, you've got small cap US stocks, you can go international, Europe, Japan, emerging markets even, bonds, there's real estate specific investments, there's MLP oil pipelines that are yielding north of 8% right now. It's a decent category. So there's a whole world out there, and diversification is great.
Yeah, all right. My last question for the moms and dads watching out there this morning, college savings. How much are we trying to save for college at this point?
Oh man.
Is that a loaded question?
It's a very loaded question. You know, you have, ever since COVID, you've got fewer people going to college. Maybe you're going straight into the trades. There's programs that are teaching people how to be electricians, plumbers, and they're paying you to learn. So that's not a bad way to go. As far as college, there's state schools and there's private institutions. So it's all over the map at that point. But again, you want to get started early. So if you're having kids, you think they're going to go to a fancy college, start investing when you start thinking about having that kid.
Okay. You got to start early.
Yes.
Maybe even before the kid gets here. Thank you so much, Derek. Really appreciate you coming on and breaking that all down for us.
Thank you.
Thank you.